A special guest today on Bloomberg HT, Michael Saylor. He's the MicroStrategy founder and chairman. Michael, welcome.
Yeah, thanks for having me.
Bitcoin destined for an extended period of market dominance, potentially doubling its current level. How do you see the future of Bitcoin under global economical challenges, especially now Fed signals that it must restart rate hikes?
Well, Bitcoin represents the only universally acknowledged form of digital property in the world. So if you're looking to own a piece of property that you can move to 100 different countries where everybody in every country is going to want it, and if you want a piece of property that people will want in 100 years, Bitcoin represents that universal global asset. There's no building, there's no stock, there's no company, there's no commodity that will last 100 years that you can move from country to country. So for global citizens that are looking for wealth preservation over the next 100 years, and they're not quite sure about the economic policy of any country or about where they'll be, and they want something scarce, desirable, that some affluent person is going to want to buy from them no matter where they end up, Bitcoin represents that asset.
And as you know, there are some discussion on the crypto regulations, especially Security and Exchange Commission is taking some actions on some cryptocurrency exchanges. What's your opinion on the digital assets regulations?
Well, I think that there's universal acknowledgement that Bitcoin is the king digital commodity. It's an asset without an issuer. And so for that reason, the regulators in the US aren't bothering it. There are two other classes of assets, digital currencies like stable coins, and there are also digital securities that are issued by entrepreneurs and companies. The regulators are going to shut down the digital securities. There's not really any support for them. And there's not any support for digital currencies either. They don't want large amounts of dollars to circulate outside the control of the US banking system. So of the three asset classes, the one safe haven for institutional investors that has the most regulatory support is Bitcoin as that king digital commodity. I expect that the rest of the crypto industry will continue to rationalize, and these other assets will gradually be decapitalized over time.
And you have expressed that Bitcoin represents the best solution for those struggling in an economy with a collapsing currency, including the Turkish lira. How the Bitcoin can help some currencies internationally?
Well, I think the key to keep in mind is over the past 2, 4, 6, 8 years, Bitcoin is outperforming gold, silver, bonds, all currencies as a monetary inflation hedge. So if you live in the United States, the US dollar has been losing 7% of its value every year for 100 years. And over 100 years, you lose 99.8% of your value if you don't switch to a scarce, desirable asset. But if you live in another country, Turkey, Argentina, et cetera, in many cases, I think the Turkish lira has lost 96% of its value against the US dollar in just 20 years. So the real key is to switch out of the weak currencies, whether it's the lira, the Lebanese pound, the Argentine peso. But switching to the dollar is only a short-term solution because holding the dollar more than a few years will cause you to suffer monetary debasement at the hands of that currency. So Bitcoin represents a way to buy a property that's going to go up in value. It's going to appreciate faster than the monetary inflation rate of either the dollar or local currency. And the other thing that's very appealing about it is you can take custody of it or place it with any number of international custodians. And of course, you can't really easily take custody of any other asset. So if you want to eliminate counterparty risk that comes from having all of your assets with a bank, or having all your assets in a single country, or all your assets denominated in a single currency, Bitcoin is a way for you to exit economically from that system and from those counterparty risks.
So there wouldn't be any fundamental structural problems
Yeah, the thing that backs Bitcoin is 400 exahash of digital power. To put that in perspective, that's as much power, energy, as the entire US Navy uses in its fleet, about 12.5 gigawatts. And also, it's a fleet of 5 million Bitcoin ASIC miners spread everywhere in the world that generate so much hash rate that if an AI took over every computer on Earth, all the smartphones, all the computers at Amazon, Google, and Microsoft, all of those computers couldn't dent the Bitcoin network. It's an extremely powerful digital energy network. And because of that, you don't have to put $1 billion in a bank that's run in Lebanon or Argentina or the US or Turkey. You can put the $1 billion onto the Bitcoin network, and the Bitcoin network is nation state resistant. If all of China turned every computer against the Bitcoin network, they couldn't stop it. And so Bitcoin represents a new way to store your assets, and in fact, the most secure computer network in the world.
And Bitcoin has to prove itself as a stable means of payment. So the price is very volatile. So moreover, how can a commodity price in US dollars solve the current problems?
I think the key to keep in mind is that every citizen of the world needs 3 types of money. They need local currency, like you need the Turkish lira in order to pay your taxes and buy things locally. They want the world currency, the US dollar, to buy things internationally. And then they want a property that they can give to their children and their children's children that will last 30 years or 60 years or 100 years. Bitcoin represents the property. The US dollar represents the world reserve currency. And then your local currency is determined by the jurisdiction you live in and what your local taxes and your local expenses are denominated in. You don't need to replace the local currency, nor will you. And it's not going to replace the dollar either. What it's replacing is that building or that farm you are going to buy, or that company you are going to invest in, or a bar of gold. And compared to that bar of gold, which is not going up in value in dollar terms, Bitcoin is actually outperforming by a factor of 100 or more. So Bitcoin represents that long-term asset, not your checking account or your near-term local payments.
I see. And my last question, Michael, Bitcoin's potential boost cyber security. How is it possible?
We live in a world today where AIs could spin up 100 million fake Michael Saylor accounts. And there's no cost to create a Twitter account or create another fake account or create an email account. So it's important that we actually have some way to anchor your account into cyberspace such that you have some substance. And the approach with Bitcoin is to take your credential, say your identity, your public and private key, burn the public key onto the Bitcoin blockchain, which is the most immutable, incorruptible, indestructible, immortal database in the world, and then use your private key in order to sign your transaction. So if I wanted to digitally sign this video interview to prove that it was me, or if I wanted to digitally sign my Twitter account, or my WhatsApp account, or an iMessage account, or my email to prove it's me, I could use a private key that's linked to the public key on the Bitcoin base layer. And as I said before, if you wanted to corrupt that database, you would need an entire nation and you would still fail. And so whatever's on the Bitcoin base layer will be there in hundreds of years, even long after nations and companies fail. That's why Bitcoin represents this immutable form of truth. And it's more important than ever to have that veracity, because an AI could actually be a better version of me. It'll work 1 million times harder, and there'll be 1 million versions of them. And you're not going to be able to tell the difference unless you've somehow registered your cyber credentials on an indestructible, immortal, incorruptible database.
Michael, thank you so much for your time.